Hello and welcome to Your Trades. You're watching ET Now. I'm Snehi Shah. With me as always is Priyanka. And well, let's take stock of the market action that we've seen today. And if there's one word to sum up today's trade, it is somber, because what a trading day we've had today. Deep cuts coming in across the board. You take a look at Nifty. Nifty has ended even below that 24,800 mark at 24,750 thereabouts. You have Sensex that's also just struggled to hold on above that 81,000 mark. 0.6% cut coming in on that front as well. India VIX was up 2.5%. Nifty Bank, one of the top sectoral losers today, was also a whole lot of 1% lower in today's trade. What also did not do well today was the broader markets, because you have Nifty small cap that was 1.3% lower, 1.6%. In fact, it was the Nifty mid cap that was one of the biggest underperformers on the street today, and that index also did not do well at all. But let's also talk about some other top news of the day then, and it was Bajaj Auto that in fact had the entire market, so to say, held by, because it's a Nifty company, weighed on Nifty also today, and Bajaj Auto tanked on weak festive commentary. Although the numbers were largely in line, you had a whole host of brokerage notes today that came out with rating downgrades as well as target price cuts as well. So Bajaj Auto has ended the day almost 13% lower, and that is what is very heavily weighed on the street today. Another Nifty earning that did not do well at all today was Nestle, because overall it was a miss coming in on the revenue, EBITDA as well as margins. It was a surprise beat coming in on PAT, but however lackluster set of numbers coming in this time around. So a volume growth was also much below what the street was expecting. So that's the reason why you had Nestle also that was not doing well. But quickly taking you through the sectoral gainers and losers in today's trade. Nifty IT, the only basket that held on to the green, led by Infosys, because good set of numbers coming in. Realty Auto, your big losers today, followed by FMCG, metal, media, pharma, energy, PSU banks. All of these in the red. But Priyanka, what stood out to you today?
No, absolutely. Snehi, the way we have seen this is a third consecutive session that we've closed lower, and of course closing below 24,800. We really need to find out where the support lies now. Kunal will join us to talk about it later, but then market is falling. The reasons are actually known. If you talk about FI's monthly selling, that is at a record level post March 2020, and now even money is clearly moving out of Indian markets. That's why clearly earnings are failing to impress. That's what we have seen. Clear counter today was IT space. If you look at the kind of Bajaj Auto numbers weighted on the entire auto pack, it was the IT which kept the market afloat. In fact, eyes will be on the stalwart numbers coming in from Infosys, Wipro, and the kind of numbers we've seen from HCL and TCS and in fact Infosys. Now the street is of course bullish on IT pack, and that's what we've seen, that IT counters actually did the counter today. Reliance was also able to keep itself afloat. Majorly there was some sort of excitement because of the bonus issue, which will of course the date coming nearby. Now the major of the results, Tata consumer numbers coming in, Nestle understanding it was also a miss. So kind of FMCG pack is also subdued at this moment, because not much of expectation being built in from the earnings right now. But clearly some of the counters, UBS downgrade on SRF, that clearly played out. 2% down we were today. In fact, major all the sectoral indices, if you look at it, it was major of it is priced in that we are in for a subdued earnings quarter, and now earnings are clearly failing to impress. That's what we've been seeing. But now where is the major support lying? Is it at 24,700? Are we in for more consolidation, or maybe lower levels from here also? Let's understand it from Kunal Bothra, who joins in. Kunal, welcome to Your Trades. Good afternoon. Help us understand, this is a third consecutive session that we've closed lower. Despite that, there is not a weakness in globally markets. In fact, we are again underperforming the global peers. Now, these were majorly the expectation which were already baked in, that it's going to be a subdued quarter, and even the FIs selling, it's getting intense day by day. Now, what is that the traders should look at it in terms of index level? Where is the immediate support that you see on Nifty as well as on Bank Nifty?
Yeah, good afternoon. So I think yes, over the last 10 days, 10-15 days, one thing is very certain, that this is India specific selling, or selling specific to the Indian equities, because when you look at this comparatively with respect to the Asian peers or the emerging markets, as well as with respect to the entire globe, I think we've been rank underperformers in the last 10-15 odd days. Now, over the last 2-3 days, yes, the selling pressure has come back again, but then the case for the markets going into a bounce was also a lot more shallow. So we bounced off from 24,700 mark, just last time around, almost a fortnight back towards 25,200 to 50 levels. But that was very, very shallow, very strong lack of participation from large cap names. You see so many stocks falling below their longer term moving averages on the Nifty 50 basket itself, let alone the mid cap and the small cap index. So I think when you see a deteriorating market breadth, it also gives an indication that the markets are not ready for a major kind of a trend reversal or a bounce back, but they could be looking at more of a shallow consolidation or even resumption of correction. So I think over the last 5-6 days we saw the indices consolidating, but today we've managed to pick up pace again in terms of correction. Now, ideally, I have seen historically that whenever there is such kind of selling specific towards certain equities, the selling generally takes at least a process of 3 to 4 weeks or maybe 1 to 2 months in many cases. So which means we could expect that the index could drag for some more time. There could be points where the indicators would become oversold, the markets would get into a process of bounce, but a major uptrend or a rally could begin only once we see this consolidation or this correction getting over for the next 2-3 weeks. So my sense is that the strategy should be to be a bit more cautious, as well as look out for just specific larger cap names and more solid stocks.
Okay, Kunal, so Nifty right now also at a 1 week low. I mean, you did say that this is a period of consolidation that you see spanning out for a couple of weeks to a couple of months now going ahead. At a time like this, do you think it's a good time to make fresh buys? And if so, what are your picks today?
Yeah, of course. I think in every market you will always get those opportunities for stocks which could be rank outperformers. So my bet is on 2 stocks, and one of the sector which has apparently done reasonably well is the Nifty IT space. So Tech Mahindra is something which I would recommend at current levels. The stock closed above its fresh highs of 1700 plus mark. Would look out for targets in the range of 1770. Stop loss could be kept at 1660 for Tech Mahindra. And one of the other stocks which where recently also gave a breakout is BEML. Many of the defense stocks are making a very strong comeback. BEML has managed to cross above its 50-day moving average. Looks very attractive as a short-term chart breakout. Look out for targets in the range of 4100. Stop loss could be kept at 3800.
Interesting. In fact, all the PSU's counters are coming back, not just even defense and even railway counter if you look at it. Thanks very much, Kunal, for the 2 stocks that you've spoken about, Tech Mahindra as well as BEML on Kunal's radar. Now, Srishti also joins in to talk about the 2 stocks that she's spotted on the technical front. Srishti.
Well, certainly 2 counters, one on the breakdown side and the other one is on the breakout side. Firstly, onto the breakdown side, let's have a look at Piramal Enterprise, because this particular stock has seen already a phenomenal run up, but in today's trading session, it was a 6% fall coming in for this particular stock. And it's been 3 times that the stock has faced a rejection around 1120 odd levels. It was not just a strong red candle for today's trading session, but the stock also managed to break below its 20-day moving average, as well as this move was also supported by a short build up on the derivative side. So hence we thought of highlighting the stock on the breakdown side. Moving on to the next counter, and today this counter is also coinciding with one of the Kunal Bothra's pick, and that is Tech Mahindra. But if we talk about the technical pattern and the kind of breakout that we have seen, then you must see the weekly setup of Tech Mahindra, because this particular stock, this is a weekly chart, and the stock has been consolidating for a while, making a way upwards and continuously taking a support at its 20-day moving average, and on the weekly basis crossing its previous highs. It was a strong green candle coming in for Tech Mahindra, very well supported by a long build up on the derivative side and supporting its 20-day moving average as well. So these are the 2 stocks on the breakout side. Back to you.
Absolutely. IT space kept the market afloat today, and now Tech Mahindra is on the radar. Srishti and Kunal both voicing a yes on this stock. Thanks very much, Srishti. Moving on, let's get your word from the wires. We did speak with Mihir Vora, who's the CIO for Trust Mutual Fund. Let's understand what he has to say, which sectors he has a bullish view on, and what spaces is he liking right now.
Your infrastructure, manufacturing, capex, real estate is growing quite robustly. Not only not only urban, but even rural real estate should pick up with the government support that we are looking at. So I think durables should continue to do well, because the per capita, etc. thesis still holds. Within auto, I think the SUVs segment probably will continue to do better. It's already more than 50-60% of the market, but I think that should continue to do better. We are talking about hotels, we are talking about travel and tourism, airlines, all those kind of segments can do better. Even real estate, you can see the premium real estate doing better. These are long-term themes that we have identified, because for the first time the private sector is coming in. So the runway of growth can be very long. Whatever stock picking needs to be done is frankly in the smaller companies in IT. Private sector banks still have the scope to take market share away from PSU. PSUs are still large,
Well, on that note, we'll slip into a very short break on this edition of Your Trades. We'll be right back on the other side. You stay tuned.
Welcome back. You're watching Your Trades, and now Infosys results are out. Of course, revenue, it's on the quarterly basis, it's up 4.3%. In fact, PAT is also up nearly 2% quarter-on-quarter basis. We have Sandeep Agrawal, who's a fund manager for Savalue Investment. Let's understand from him what is his reaction on the numbers so far. EBIT margin is also 21.1%. It is in line. Hi, Sandeep. Welcome to Your Trades. Your first reaction on the numbers right now.
Thanks for having me on the call. So the numbers are looking in line. Obviously, there is a very small miss on the margins. The expectation was around 21.4 and it has come at 21.1. But there is a slightly bigger thing into PAT. I think there was an intake acquisition, which if you factor in, then probably there seems to be a small miss on the PAT side. But broadly, numbers are in line, and also, as expected, they have raised the revenue guidance. So I think all in all, these numbers are decent numbers and are more towards expectation rather than behind expectation. Let me put it this way.
My reading of the numbers is slightly different. It's a miss coming in on the margin front. We were working with a 20 basis point improvement. That hasn't come through. The street was expecting the guidance to be increased to 4 to 5%. They've increased it, but to 3.75 to 4.5%. So there's a miss coming in there as well. If you look at the deal internals, the deal win has come in at $2.4 billion. Street was working with at least $3 to $4 billion as far as the deal wins are concerned. To my mind, it looks like a bit of a miss coming in from Infosys. Wouldn't you concur?
No, see, in such a size company, what you're saying, 0.5 and 0.75%, I think that means generally people give a pass. I would not count it too much, but broadly numbers are in line. The final internal details will come more. Secondly, on the deals, this we have seen this in Accenture numbers also, that the consultancy side of the order book was quite weak. And so, the deal pipelines could vary quite a bit depending on what kind of deals are there. So I would not read too much into that. We have seen similar trajectory in TCS also. There was some hit, some miss, but broadly it indicates that things worst is behind. But at the same time, I would like to reiterate that the stocks have gone up substantially in last few months. So there could be good time correction, and I don't see upside moves in a hurry.
Looking at the other internals as well, the voluntary attrition has gone up to 12.7% versus 12.7% last quarter. The number of total employees is higher, so there's a net addition this time. That's at least some sort of a breather coming in. But if you look at the various business segments or various geographies, the financial service segment is up 2.8% on a YOY basis, while retail is down substantially, down about 9%. If you look at North America, that's down almost 3% on a year-on-year basis. While financial services for the likes of HCL Tech grew by almost 4%, this one has been a bit slower. What's your view here as far as the various segments of Infosys is concerned, and what's your reading of North America right now?
So, we saw similar trend even in case of TCS, where, North America was little weak and BFSI was better. And we are seeing similar trend here. So, I would just like to reiterate my view that we are going through a phase when most of the clients are cautious, and they will take some time before they finalize whether they want to spend their discretionary part of the budget or not. Because one, there is an election which is upcoming, and second, people are still concerned whether the downturn in economy will be a very harsh one or it will be a soft one. So I think because of that, you are seeing deviation in all those pieces where there is a discretionary component involved, whether it is a consultancy piece or whether it is a discretionary piece. We are seeing a lot of deviation there. So I would reiterate that, there is not much to read in this number. More data will be actually available only on the call, and once, we speak to the management or on the press. That is the way we look at it.
Hold that thought, Sandeep. I just want to go through the commentary that Salil Parekh, the CEO and MD, is talking about. He says it's a strong growth of 3.1% quarter-on-quarter in constant currency terms. The growth was broad-based with good momentum in financial services. This stems from our strength in industry expertise. He's talking about the generative AI and the Topaz part of the business. The large deals, they say, is a differentiated position for them. And the employee commitment is also something they're talking about. Jayesh Sangrajka, who's the new CFO, he's talking about focus on accelerating revenue growth with sharp focus on margin performance. They are talking about continued benefits and value-based pricing and utilization despite higher employee payouts. Cash generation is something which is healthy for them. So that's the first take coming in on Infosys. I quickly wanted to take a look at Wipro as well. We just have a very initial number that we have at our hand, which is the profitability figure and the fact that the company has reported 1:1 bonus issue right now. Would you want to comment on Wipro at all, Sandeep? The revenue has come in at 16,895 crore and that's the total rupee revenue I'm talking about. And the profitability is close to around 2,700 crores thereabout. What's your first take on that one?
So, we would like to see the total revenue because this is a partial part of the revenue in my view. So, let the whole number come, then only we will be able to comment. But PAT number, if it is the complete number, then it looks slightly below what was anticipated.
Poll was also throwing up a number of 3,000 crores. So I'm waiting to get more details on that because 2,700 crore thereabout would be a bit of a miss coming in. I don't see a major exceptional to that extent. In fact, the other income is higher if at all. So we'll have to wait for more details as far as Wipro is concerned. But as per you, there is not an expectation of a big change in the estimates of Infosys at the moment and the pecking order that people had on TCS versus Infosys.
No, I don't think there is major change, and in fact, I think that most of the stocks have built in all the positives, and they are trading at a very, very decent valuation now versus 6 months back. So, honestly speaking, the numbers are neither the numbers nor the commentary is such which gives a lot of excitement about near-term returns.
For joining us on the show and sharing your first take of Wipro as well as Infosys with us. But why we were focusing on two of these IT Nifty companies, you have Axis Bank that has also come in with its numbers. Let's quickly take a look at what these numbers are looking like, and it's seeming to be a good set rather coming in because you have NII that's come in line with what the street was expecting. You have PPOP and PAT that have in fact beat the street's expectations. So first cut overall, it's looking like a good set of numbers coming in. You have on a standalone basis, net interest income coming in at 13,483 crores versus 12,315 crores, which is up 14.2% on a year-on-year basis. 9.5% year-on-year. PPOP has come in at 10,712 crores compared to 8,632 crores, which is also up 24%. So massive uptick coming in on that front, and that's a beat on what the street was expecting as well. You have net profit figure that's also gone up by 18%. That's almost 7,000 crores coming in, 6,918 compared to 5,864. You have asset quality that has largely improved this time around. In fact, GNPA has come in at 1.44% compared to 1.54, which is down by 10 bips. However, NNPA is rather stagnant this time, coming around at 0.34%. So largely you have a good set of numbers coming in. However, what's a little slightly worrying on this front is provisions. When you take a look at that on a sequential basis, has come in at 2,204 crore rupees compared to 2,039 crores QOQ, which is an uptick of slightly more than 8% on a sequential basis, but largely good set of numbers. PPOP and PAT above expectations and NII largely in line.
All right, so it looks like a beat, at least banking numbers are coming up beat. If you look at even the global numbers, Morgan Stanley also posted good set of numbers, and this is the first banking major which has posted numbers here, and Axis Bank a good beat. In fact, let's see how banking stocks react tomorrow when we open. But then, of course, IT Pack, Infosys, Wipro, many of the majors have already registered the numbers so far. So let's see how it goes further. But then, moving on, let's talk about what is in there from the... Okay, so Axis Bank upbeat number, will even get you more details on that. But then clearly the kind of move we've seen on the banking stocks today, in fact, barring SBI, all the banks were dragged today. Let's see, this is the first major bank, private sector bank, which has reported numbers, and upbeat numbers, at least better than what Street was penciling in. Let's see how banking saw this will be able to lift it, because clearly sentiment so far has not been lifted by the earnings so far. FIs have been seller, and second, earnings have been majorly missed up till now so far, whatever numbers have been reported so far. PAT is a beat, 18% we've seen, it's up 18% on standalone basis, Y on Y these figures are, and even NII, that is up beat 9.5% on a year-on-year basis, what we have seen. GNPA and even NNPA, both on standalone basis, quarter-on-quarter basis also, they are little in line sort of numbers on GNPA, but then NNPA is equivalent only.
Absolutely, and if you take a look at advance and deposits, also largely in line set of numbers coming in. You have the press release also coming in from the management that we will be going to in a bit. But let me bring on board our banking analyst Gaurav, who's been tracking these numbers, and he is here with the first cut. And Gaurav, seems to be like a good set of numbers.
Well, yes, when we talk about Axis Bank, we are seeing a little bit of positive uptick. What we are seeing is that when we talk about net interest income, that is fairly in line. It has come to around 13,000 crore rupees. But when it comes to PPOP, which is pre-provisional operating profit, we are seeing a little bit of beat over there. It has come to around 10,712 crore rupees, which is 6% above the ET now estimate. And at the same time, when we talk about profitability, there also we have seen a beat of around 9%. Now it has come to around 6,900 crore rupees. One thing that we need to keep an eye out is basically the provisions, because we are seeing some uptick in there as well. We have seen provision number which is at around 2,200 crore rupees. But other than that, when we talk about advances and deposits, we are seeing a little bit of fair amount of growth over there. The both advances and deposits have increased almost by 2% on a sequential basis. Advances now stands at around 9.9 lakh crore rupees, while deposits have crossed that 10 lakh crore rupees. It stands at around 10.8 lakh crore rupees. Overall, when we look at the numbers, it seems that a little bit of above expected number is what we are seeing in Axis Bank, at least as a first cut. But definitely we will be watching out on what the commentary is coming out on provisions as well as the net interest margins, which is a key thing to watch out for, because let's not forget that in the last quarter we have seen Axis Bank actually coming up with a negative surprise in terms of unsecured loans. So definitely watching out on how that number comes out and how the net interest margins will pan out for Axis Bank.
Absolutely, Gaurav. You know what? I have the first cut on the press release over here. You have the net interest margin number that has come in at 3.99% right now. So that's something that we are getting. And the estimate also said that NIMs can remain under pressure and breach that 4% mark. The estimate was 3.98, and now what we're getting is 3.99. So largely in line on the NIMs front as well. But Gaurav, thank you so much for joining us. And on that note, viewers, it's a goodbye on this edition of Your Trades. Thank you so much for watching.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.